Podcasts on UNC-TV.org are made possible through the financial contributions of viewers like you, who invite you to join them in supporting UNC-TV.
Did the mortgage industry ride the wave up? Obviously it did, but did it ride right alongside new construction, real estate?
Definitely. As home ownership, the percentage of home ownership went up, construction went up, new properties were being built, absolutely. It's all intertwined. It's a huge industry.
Explain the product during the good times, and I'll use it. I don't know the exact date it started and know roughly when it ended, but I mean, how many products were out there? Was there an option for most everybody who wanted to buy a house?
Pretty much. If you were in the market for a house at one time, there were products available, as I've mentioned, and some of them weren't appropriate, neither were the borrowers. But there was an endless number. And it wasn't just the inappropriate loans. Your mainstream lenders were offering different products, variations off of products that they created for their retail side that never existed before. A lot of people don't realize that a lot of the big lenders, they did stated income loans. Stated income loans back then were appropriate for the right person for the right reasons. It just became a big bold-faced lie after a while, and it was abused terribly.
How many loans were only deemed inappropriate after we look back on it in time? But at the time, it was a good idea or an appropriate product.
When it comes to the subprime industry, probably almost all of them, quite frankly. You know, when you look at a loan that goes south or goes into foreclosure, the key as a broker lender is to look at that loan, and maybe it was made 3 years ago. And you say to yourself, given the information I had in the file at that time, would that loan be made again? And if you say yes, then, you know, the circumstances happen. Divorces happen. People lose jobs. Those situations you can't plan for. But, you know, some of the lenders will look back, all of them. There's plenty of guilt to go around, and will say, I have no idea what I was thinking about, except that I had to compete, and therein lies part of the problem. If they didn't have the products, they didn't get the business.
Dr. William Hall at UNC Wilmington brought up that point that you had mortgage brokers who were paid basically to close the deal to help people get loans, and that it's hard to blame someone for making a living if that's what the rules of the road were. Would it be okay for a broker to look at someone and say, I'm not going to give you a loan, even though it takes money out of your pocket if you're trying to build your business?
Well, you have to have a reason. You're going to have to give them an adverse notice, what is called an adverse action, and it has to be a specific reason. It can't be, I just don't care for you, or I don't care for the loan. There has to be some situation. Your income doesn't qualify, your credit doesn't qualify, you know, you haven't shown enough stability. There are a whole bunch of different reasons. But yes, and professionals all across the industry have done that many times.
So if you had a client come in, sit down in front of you, even though you may personally think they didn't deserve a mortgage, if there was a product you offer that fit their needs and their profile, you would be obligated to help them achieve that if they wanted it?
Pretty much. You had people that did certain kinds of business. For instance, I've never done a subprime loan in my life. I did all what they call prime loans and FHA loans. But people who were in that industry, yeah, if there was a product available, regardless of who it was, they were going to put those people in the product. And just like any other industry, there were the share of bad actors that just did people a tremendous disservice in putting them into products and houses that they simply couldn't afford. I think a certain amount of the responsibility also rests with the home buyer, the borrower too. They know when they go into something whether they can afford it or not, for the most part. But yeah, if there's a product available, it's the same thing. If this particular lender doesn't give the borrower that loan and they've got the product, it's going to go right down the street, a block down the street, to the next lender and get the loan. That may not be a great reason for making the loan, but if the products are available, but you've got to stay in business, you've got to compete.
How would you compare the housing, the slump that happened after the boom, the last 2.5 years, to maybe the recession of the early 90s, the recession of the early 80s when you were getting started?
It doesn't compare. The only thing that I can compare it to is when the S&L, savings and loans, went down, which was back in the 80s. And they being the government, established something called the RTC, was the Resolution Trust Company Corporation, to take care of all these foreclosures and people walking away from homes. you got a lot of the same end results. Property values plummeted. There were many areas of the country you simply, blenders wouldn't lend in. But what appears to be different reasons is kind of the same concept. Savings and loans only made adjustable rate loans. And when those things got out of hand, exploded, or adjusted too much, then there were problems. Since then, this is the closest to that I've seen, and this is actually much worse. This is much, much worse, goes much deeper, and unfortunately it's probably going to take longer to climb out of.
What is your long-range prognosis or diagnosis for the housing market in North Carolina?
In North Carolina, actually, I think it's very, very good. There are many, many graph studies that came out. We were one of the very last ones. In fact, we were the very last state to actually dip into a negative growth. We held on to 0.5% for a while. There's an old saying about last in, first out, and it really is true when it comes to these sort of times. Even though we've got a high unemployment, we are in so much better shape than so many other states. And I do believe that we will respond and we'll come back relatively quickly compared to other parts of the country. In fact, I think we may lead the way.
If you're a consumer going forward and wanting to purchase a house or obtain a mortgage, what would you say to them is their responsibility before they sit down with their mortgage broker to discuss lending options?
First of all, they need to check their credit, and that's easily done. You can do it for free. The government's got a site. Find out what their credit scores are. Take a look at it, make sure that it's accurate. Make sure that they've got documentation to the income taxes, pay stubs, whatever it may be, because they're all going to be required to provide that. And make sure that it fits what they think they can afford, what they've got a payment in mind. But they need to have all that together, and they need to take a look at it. So many people don't know what's on their credit. And frequently, that's not right, it's wrong, and more so than people would know.
Is it appropriate to trust someone else who doesn't know you, who's looking over your portfolio, to tell you how much you can afford? How much of it's hard stats? How much of it is gut feeling, being able to sleep at night because you're the one paying that mortgage when you get the loan?
You're asking about just some third party or a specific?
Oh, you sit down, say you go to your bank, I want to borrow money and buy a house. Well, sir, you can borrow this much. Makes me feel uneasy, I don't know. Well, the documents say you can. Which do you trust, your own gut feeling as the consumer, or do you trust the professionals who are going to read your financial portfolio correctly?
My personal opinion, and it is mine, you trust your gut. You know what you can afford. Responsible people know what they can afford. And I've had many borrowers over the years that say, I can't believe they say I'm eligible. I would never think of that kind of a payment. But they're responsible people. But I think you always go with your gut, because what you can probably afford in years past was much more. Now, perhaps it's getting close. Those two points are getting closer together because lending has tightened up as much as it has.
And as a customer of a mortgage, a broker or a bank, is it okay to look at your loan officer and say, I'm not comfortable borrowing that much money?
Absolutely. Absolutely. Ultimately, the borrower is in control of the process.
It's intimidating.
It is intimidating, probably, but absolutely. I mean, you have a right to make the decision based upon what you feel. You have a right to ask for any question you want to. You have a right to get the proper disclosures. That's your right, and that's why it's so important you deal with somebody that you feel is going to take care of you and treat you right. Most of my business and a lot of other people's business over the years is strictly referral. When my company was up and running in Arizona for 20 years, I left 7, 8 years ago before I came to North Carolina. When I left, I was actually doing loans for the children of people that I started doing loans with when I formed the company. Referral business is the best thing you can get. If you can get somebody that refers, had a good experience with somebody, it's still the best thing to trust.
With the new regulations, with the new stricter lending guidelines, what is it going to mean for society? Because I've heard President Bush say homeownership should be, maybe not near universal, but everyone should have a right to own a home. And but where we are now, who's going to own a home and who's not going to own a home?
Actually, when you say everybody has a right to own a home, there's a word that's gone in there now. Every qualified borrower has the right to own a home. It's just like the commercials you see on TV for anything, any goods, I won't specify. And they'll always say for well-qualified borrowers. So that's exactly where you are. You know, you're either qualified, it's come down quite a bit. There's a lot of people that 5 years ago could have gotten a loan very, very easily. They can't now. And there are people out there that have to recognize that they are not ready to be a homeowner. They have no idea what it takes to keep up a home. They have no idea how many trips they're going to make to Home Depot or Lowe's. They have no idea about all these ancillary expenses. And they probably aren't in the best position to buy a home. Personally, I don't feel everybody should own a home. I've read several articles written by relatively qualified people who say, you know, that is right. There are people out there that shouldn't own a home, and quite frankly, in many cases, renting is a better option for them to go fiscally for any one of a number of reasons. But for so long, that was the American dream, was home ownership. That was that sacred white cow that was out there. And it's been seriously soiled.